Me. So today we'll be starting our chapter 4, that is financial statements of a business. So today we'll be discussing the following: the introduction to the financial statement and the two types of financial statement, and calculating gross profit. So we'll be mainly focusing on calculating gross profit. Okay, so introduction to financial statement. So what is a financial statement? The final output of the accounting process is financial statement. So we know what a transaction is. The input, the transaction, that is purchasing goods worth of 50,000 for rupees 100,000, or purchasing a vehicle, purchasing a land. So all of these are transactions. Okay, so this transaction, next what we do is accounting process. First we record them in the prime entry books. Then from the prime entry book we post them to the ledger. From ledger we prepare the trial balance and then suspense adjustments and all these things. And so we have learned all of these before. So finally we have the output, that is the financial statement. Okay, so when you say financial statement, we have the trading profit and loss account and the statement of financial position. Statement of financial position can also be called as the balance sheet. So why do we prepare financial statement? What is the objective of any profit seeking business? To earn profit. Any business will want to earn profit. So it is important for them to know whether they make enough profit, whether they have adequate operational profit to continue their business. So we do profit and loss statement to find whether the business is running in profit or loss. So what they can do about it. Next, financial position of the business reflected through assets, equity and liability. So financial position is balance sheet, I told you all before. So the things that we will be considering in the balance sheet is assets, equity and liability. So you all know what assets are, equity and liability. We have learned all this before. So putting all these together, why we do financial statement is ultimately to make decision for the future of the business. So if the company is making a loss, obviously there is no point in continuing a business, or they need to make new arrangements, new investment plans and things like that. So to make decisions for the future of the business, they prepare financial statement. Okay, so this is straight away from your book. So the financial statement is prepared to obtain an understanding on the financial performance of the business during a specific period and the financial position as at a particular date of the business. So when you say specific period, so that we call as accounting period. So the financial statement of a business is prepared for a specified period of time. So that is generally 12 months. For example, 1st January 2015 to 31st December 2015. January to December, 12 months. So it does not need to be January to December. It can be any time period, given time period, which is generally 12 months. So for example, April 2015 to March 2016. Okay, so April to March, okay, like that, 1 year. So that is like financial period. So in the given specific period, you do this to understand the financial performance of a business and the financial position of the business. You do financial statements. Okay, so we'll be looking at sole proprietorship. Sole proprietorship is less complicated. You all know, like, it doesn't have shares and shareholders and all those things. So we'll be first we'll be learning about how we prepare profit and loss statement and the statement of financial position for the sole proprietor business. Okay, so today we won't be doing both. We'll be only focusing on the first one. Even on the first one, we'll be learning how to calculate the gross profit. Okay, profit and loss statement. What is profit and loss statement? Prepared by the business organization to calculate the profit or loss earned during a particular accounting period. Obviously, by the name itself, you can understand, to identify or to calculate the profit or the loss the business has earned during a particular accounting period. So calculation of profit and loss of the business is performed in two steps. So that is, first you need to calculate the gross profit and then you have to calculate the net profit. By doing both, finally by calculating the net profit, you can find out what the profit the business has earned or what the loss the business has earned. Okay, so calculation on gross profit in simple terms, this is the equation to calculate gross profit. Gross profit equals to sales revenue minus cost of sales. So sales revenue is the total cash sales and the credit sales done during the particular accounting period. So now remember, we are doing it for a particular accounting period, to a certain, from January to December or April to March or something like that, a particular accounting period, and we are looking at in not the value, the quantity of the goods. We are not talking about we bought 1,000 stocks. No, it's not about 1,000 stock. It's about how much that 1,000 stock is worth. Okay, so both the cash sales and the credit sales that we have done during the particular accounting period. So, for example, it's shown cash sales is 58,000, credit sales 76,000. Therefore, sales revenue is 134,000. Okay, so cost of sales is the cost of inventories that was presented for trade. Okay, so the cost of inventories that was sold. When you are saying cost of sales, the cost of inventories for the goods that was sold. Okay, so these are some basic things that you all should remember. There is something called closing stock, opening stock. And so when you say closing stock, that is the remaining balance of the business, the stock that you have not yet sold. Opening stock is the closing stock of the previous accounting period. So that is the that is how you start the business. Okay, so let's say last accounting period, there were 50,000 goods, 50,000 worth of goods that was not sold. For this accounting period, that 50,000 becomes the opening stock. And so obviously there is no opening stock in the first year of the business. So what comes there is, so can you do a business without stocks? No. So we don't have opening stock. So what comes there is purchase. So any year we will have purchase of goods. So when you calculate cost of sales, we have to consider closing stock, opening stock, and we have to consider purchase, and we have to consider the expenses that occur, loading and unloading expenses and other expenses that occur when you purchase goods, when your purchased goods are transported to the business premises. Okay, so just remember, gross profit is sales revenue minus cost of sales, and the cost of sales includes the following. Okay, and next, so these are some example what gross profit and what gross loss is. So obviously now we learn saying gross profit equals to sales revenue minus cost of sale. So if the sales revenue is higher than cost of sales, then it's a gross profit. So for example, you see here, sales revenue is 134, cost of sales is 90, therefore it's a gross profit 44. Okay, and the other way, if the cost of sales is higher than sales revenue, then we have a loss by the cost is higher than the revenue that we have got. That is the second examples here. Sales revenue is 134 and the cost of sales is 140. So cost of sales is higher than sales revenue. So it's a loss. You see brackets, that is, it shows loss or minus. So 6,000 loss. Okay. So this example I will explain. Then I will give you all a small sum. You all can do it. And you all can come back to me if you all have any questions. So the example here is a business organization has the following information. So they have given you the opening stock, purchase, loading expenses, carriage inwards and closing stock. So let me tell what this carriage inwards is. Carriage inwards is when you bring the goods that you have bought to your business premises. Now you give a transportation money, or you have to pay them for bringing the goods to your business premises. That is called carriage inwards. Okay. Okay, so opening stock. So this is how you will calculate the cost of sales. So you can put a small grid like this. So the opening stock, we have 15,000, and then you add. Now we are calculating the cost, how much we have incurred for these sales that we have sold. Okay, so purchase, from that we add loading expenses, carriage inwards 9,000. When you add all of this, it's 112,000. From this 112,000, you deduct the closing stock, which is 22,000. When you deduct the closing stock, cost of sales is 90,000. Let me make it clear to you all here. when you calculate the cost of sales, we are calculating the cost that was incurred for the goods that was sold, not for the goods that is remaining, that is closing stock, not for the good that is remaining. We are calculating only for the goods that were sold. So that's why we have to minus closing stock from the opening stock and whatever we have purchased and everything, because we want to find the calculation for the stock that was sold in between. Okay, so if you all have got this, you all can do this question. So this is some informations are given to you. Sales stock 1/1/2015 is opening stock. Stock 31st/12/2015 is obviously closing stock. They have given you purchase and carriage inwards. So once you have done this, pause the video, do this, and then you all can do the check the answers. Okay, answers. So first you all can put a grid like this and you all can say calculation of gross profit for the year ended 31st/12/2015, or you all can just write it somewhere in between. So however you all have done it. So first state the sales income of the business. So the income, as they have clearly given you the income here, 150,000. That is the sales income that you have got. Okay, and then calculate the cost of goods sold by the business. Okay, so we have the sales and then the cost of goods sold. First we have to add the opening stock they have given us, 45,000. With that purchase, 88,000. Carriage inwards, 2,000. And the value is 135,000. And now I already told you all it's the cost of goods sold. So you have to find what only for the value for the good that was sold. So you deduct closing stock value, that is 15,000. So when you deduct, you will get the cost of sales, that is 120. So the cost of goods sold by the business is 120,000. Next you have the gross profit. Gross profit is sales revenue minus cost of sales is gross profit. So sales revenue is 150 and you figured the cost of sales, that is 120. So from 150, when you deduct 120, you will get 30,000. Okay, so y'all can do the activity 1 in your book and I will send you all a small worksheet. So finish that, and next lesson, that is on Thursday, we will have online classes. So y'all can, just to make sure that y'all have understood this. So if y'all have any question, y'all can come online and ask me now, or y'all can wait till Thursday and y'all can contact me then. Okay, and don't skip classes. Even if you are unable to come online, try to do some work from home during that time period. Thank you, girls. And stay safe.